Hi everyone, and welcome to Geometric Advanced Stock Analytics. Today we are looking at Celestica. So a quick disclaimer before I get started, I am not a financial advisor and nothing here is financial advice. This video is for educational and entertainment purposes only. But if you like deep dive analytics and dashboards like the one you're going to see today, please like this video and hit that subscribe button because I think this is a tool that's really useful and can help you make smart investing decisions. All right, so let's get started and dive right on in. So first thing I want to show you is that up here in the drop-down menu, I've selected Celestica as the stock we're going to look at today, and I've selected the period January 3rd, 2022 to October 24th, 2024. That means period 2 is October 24th, 2024 to October 29th, 2025. All right, the first metric we're going to look at here is our threshold outperformance index. This means based on our average ups and our average down, how much does the stock need to win to go up or to have a positive trend? And that's over 48.2%. And then how much is the stock actually winning? And that's 55% here. When you divide those two numbers, you get 114.2%, which is my index that I've defined right here. Now let's look at period 2 and see how things have been progressing. We can see that it needs to win 47% of the time, or more than 47% of the time to go up in period 2. It's actually winning 57% of the time. And so the outperformance index is 121.4%. It is getting better for sure. Next, we want to look at our stability score. So basically, I look at how many days are above a 3% change and then how many days are below a negative 3% change. For period 1, 8.9% of the days are more than 3% in the positive direction, and 6% of the days are more than 3% in the negative direction. It's kind of a volatile stock. It moves a lot. That means its overall stability score is 85.1%. Moving to period 2, we can see it's become more volatile. So we have 17.2% of the days are above a 3% change. That's really a high number right there. And then we also have 9.8% of the days that are below a negative 3% change. It's also a high number, but it kind of pales in comparison to the number of days above a 3% change. It gives an overall stability score of 73%, which, this is a volatile stock, but it is still performing well. Let's escape out of here. I'm going to zoom in a bit lower to focus on this stuff right here. And I got my marker going perfect. So the next stat we look at is the positive trend persistence. This is something I've created where I count the number of 5-day winning streaks and the number of 5-day losing streaks over a specific period and determine a percentage of how many of them are the 5-day winning streak. So here we see we have 15 5-day winning streaks and 8 5-day losing streaks over period 1. So 65% of their streaks are positive ones, which is a good number. Looking at period 2, we have a similar number. We have 9 5-day winning streaks, 6 5-day losing streaks, which means 60% of their streaks, 5 days or more, are of the winning kind. Next is my favorite stat that I like to look at. It's called the percent chance of a future winning trend. So let's back out of here and let's look at this chart right in front of us right here. We're going to look at this chart right here. So basically what this chart is, it's that threshold outperformance index, but it's not plotted based on the average of the entire period like I've done over here. It is actually a 51-day rolling average. So you can see how the threshold outperformance index is behaving over time. And we can see in the first period here with Celestica, it's kind of a flat line, but it is overall pointing upwards. So how do I get this data down here? So the 87% chance of a future winning trend. So basically, I look at the trend line, I take the last data point, and then I look at the standard deviation of all these data points here, and then I can use statistical analysis to determine the likelihood of a continued positive trend so that the number is going to be above this line here. And basically that comes out to 87%. When I do the same thing for, let me get those green lines out of here. When I do the same thing for the most recent period, you can see it's kind of a flatter line here. But most of the data points are above this 1% threshold. So most of the time it's behaving in a way that it's winning more than it needs to keep going up. And so I do the same math here. I look at the data points. I'm getting too cluttered here. I look at the standard deviation of all these data points. I look at the last data point over here, and then I calculate statistically what is the likelihood of a continued positive trend, so that it will continue to win more than it needs to keep going up. And that gives me our 87.3% number here. And so it's slightly improved. 80% is a good number. 87.3 is an improved number. So it seems, I would say it's staying flat in how it behaves there, even though there's a slight improvement there. It's not enormous. Let's get those out of here right now. I got some basic fundamentals over here. We got price per earnings of 56.4 for Celestica. The industry average is 23.7. Market cap of $54.3 billion and an annual rate of return of 148.4%. Of course, that's not going to continue forever and ever. But if you were one of the lucky ones who got in at a good time, then congrats to you. I was one of the lucky ones. It was a year ago that I just was looking for a Canadian AI play. I did a little bit of research and I saw that Celestica was recommended on one of the websites I went to. I looked into it a little bit more and bought some, and then I've reaped the benefits ever since. And makes you feel smart when something like that happens, but you don't want to let that get to your head. You want to still make smart decisions going forward. All right, so let's zoom in again. Let's get there. We go. There, if I click here, here's some more charts I want to look at. So the blue here is the win percentage. So how often is the stock winning over a 51-day rolling average? And so we plot that over here. Whoop, not very neat, but let's just get that out of here. We can see that it's in a positive. The slope is in a positive direction. And as of the end of period 1, it was around 60% of the time Celestica was winning. Like it was having an up day instead of a down day. And then we look at the orange line here, which is the average up over the average down. And so that's over a 51-day rolling average as well. We can see that this is quite a volatile chart. This is jumping way up and way down. You want it to be over 100 just to know that the winning days are bigger than the losing days. Let's get these green lines out of there. It seemed to have a bit of a downward trend here, though it was incredibly volatile. So there's a lot of standard deviation in that data right there. So if we escape out of here, and then we're going to zoom in. There we go. And I'll click. We can see how it's behaving over period 2. It's kind of a flat winning percentage, hovering around 59%. When you look at the overall trend, I mean, of course, there's ups and downs, but it's a pretty flat line. And also, that's funny, it's the pretty flat line with the average up over average down. And it's hovering, you know, the trend line's at about 145% or 42%, whatever it might be there. Pretty interesting, pretty consistent, I guess. So let's back out of here, scroll down. There's just a couple of more charts to look at here. And let's look at these. Let me get my pen up here. The RSIs I have for period 1 and period 2. This is a momentum investing stock metric. It indicates whether the stock might be oversold or overbought, and thus ready for a move in the opposite direction. Though it's not 100% guaranteed, because a stock that's on fire a little bit will hover around overbought for a long time before pulling back in any substantial way. So it's an indicator, but like all of them, they're not perfect and they can't tell the whole story. And finally, at the bottom here, we have our price per share chart. We can see during period 1, Celestica was hovering around under $20 here, and then it started to take off. By the end of period 1, it was at like $90. Wasn't done yet. As we look at period 2, it started at about 100 here, came back a bit, and then just took off, and now is at $460 or $483.50. You can see up here. This is the Canadian version. I am Canadian. You can get this stock on the New York Stock Exchange as well, but I prefer, if I can, to buy it on the Canadian Stock Exchange, just being a Canadian and all. All right, so let's escape out of here, scroll back up, and what I always end on is the my overall rating up here. This is called somewhat interesting. So I have a criteria that I put in place. It's several levels and several considerations of how I determine if a stock is very interesting, somewhat interesting, neutral, and then not interesting. And so I have over 5,000 tickers on this tool. And of those 5,000 tickers, only about 25 or 30 of them are very interesting stocks. Sometimes Celestica is. It is not today. But that's not to say it could be a great fit in your portfolio. Yeah, I'm glad I had a chance to walk you guys through this tool. So yeah, that's pretty much it for my dashboard walkthrough today. In the near future, I'm looking to be selling this dashboard for personal use. So I'm very interested in any feedback you might have as you watch these videos. What's confusing? What's clear? What do you like? What don't you like? What do you want to see me do with this tool that would convince you that it might be something you'd like to be able to use yourself to make smart investing decisions? And also to wrap up, I got to give my disclaimer again that everything in this video is for educational and entertainment purposes only. It's not financial advice. I am not a licensed financial advisor. Always do your own research or consult a professional before making any investment decisions. All right, I'd like to thank you guys for watching, and I hope I'll see you again next time.